Unlike some famous YouTubers, I do not have a boosted board or a drone, but I do have a boosted brain, so that's cool. Hi traders, I'm Calhoun from TradeMastery.com. Now you and I both know that trading can be difficult, so welcome to the channel here that's designed to help you become more successful in your trades. With our S&P currently struggling up at new highs, I want to be careful next week and also potentially look for a reversal. If the market sells off, what's your strategy going to be? I'll tell you mine coming right up. So, good morning active traders and welcome to our Trading Week Ahead live broadcast. I'm Ken Calhoun from TradeMastery.com. You've got questions, I've got answers, coming at you here live on Saturday, June the 10th. Great to see another big epic turnout, right? We've got over 4,470 of you have registered for these. So, great to see you folks. Appreciate you guys are amazing, making these the #1 in the entire trading industry. As always, all information is for educational use only. I'm not making advice about what to buy, sell, or hold. By watching this, you agree not to make actual trades. It's all to teach you some of these strategies. Trading is risky, and so for that reason, I think it's a smart idea to use a demo or paper trading account only while you're learning, so you can pick up strategies and test them out in a relatively safe learning environment. My quote of the week is as follows from Albert Einstein. It's not that he said, Einstein said, it's not that I'm so smart, it's just that I stay with problems longer. It's all about the whole concept of persistence pays. And as a smart active trader, you know from start to finish so many times, you know, you may have gotten into a trade that looked good at the time, you got stopped out, and then it kept running without you. So my tip for that is, don't be afraid of secondary entries. You know, use what I call pilot trades. The point is we had a big reversal yesterday and the markets have been relatively quiet this whole past week. Look at the height, a quick tip, look visually at the height of the whole real bodies of the candles. And are they telling you a story of strong buying, strong selling, or kind of a doji, they don't know what they want to do? And that's what this past week has been. It's been a sideways doji. You got 4 out of 5 candles are colored red. That's bad. We've got prices holding steady, so we're still divergent. We still have an uptick in price. We're still in an uptrend continuation market unless we break that trend, either the 50 SMA or a lower trend line. So we're still in an uptrend, but I'm going to be going to cash myself if we get under, drum roll please, what is the magic number? Our R1 for next week is 2452. If you remember last week, I said correctly 2447 was the resistance level that we would not go long unless we broke over. And I dodged a bullet. I got you safe by just 1 point, kind of like Get Smart. Missed it by that much, but we nailed it by that much because the market missed breaking over my trigger point. So we stayed safe and didn't get caught up in the false breakout that nailed so many traders yesterday, right? Last week, if you were here, remember I said 24, I've got my notes here from last week. Last week, 2447 was my R1 trigger. So had you followed that, you would have stayed out of yesterday's pop and drop market. Next week, the trigger is 2452. Okay, I'm going to zoom out a little bit so you can see that in context. I want us to get over that 2450. So 2452 is the R1 trigger, and the S1 trigger is 2398. I always make note of these before the session. So 2398. The reason is I want us to get south of that 2400. Next support under that's the 50 SMA, then the 100, then the 200. But 2398 would be a major support. I'm going to start working out of my longs if we get under the 2410. But 2398, that's my official S1 call. That would be a reversal of trend, and that would be a 2-week low, and that's one of the reasons for that reason, that trigger point. So 2398 and S1. Now for swing trade stocks, you've probably seen a lot of charts that look like this yesterday, right? Here's SQ. Okay, Sierra, Quebec, SQ. You can see it's done a big reversal. It's been in a good uptrend. One quick learning point is that stocks will often reverse off of whole number highs. So it's a good idea kind of a squeeze. The squeeze out profit of a trade is tightening in a trailing stop within 50 to 80 cents on a swing trade as it grinds its way up to a major whole number resistance, right? Another chart for those of you who trade cheap instruments to keep on the radar for next week is CX. And again, these aren't trading recommendations, they're just charts to keep an eye on. But CX is in Charlie X-ray. CX. I like the fact it's got a nice 45-degree angle, continuous uptrend for almost 2 weeks here, despite the market sell-off yesterday. This thing went up when the market sold off, right? It got a nice lift up to new highs. So for that reason, CX may be worth a shot if it does continue its explosive range breakout to the upside. For those of you who trade currencies, the Aussie dollar, the US dollar has been relatively weak, so that's kind of the strategic, and also the British pound. British pound's even weaker because of recent political issues. So weakness in the pound and the dollar are the two strategic tips for next week. This is the Aussie US dollar, Australia dollar to US dollar. I like the fact it's done a nice bullish cup breakout. It did the cup, the obligatory handle shake, and then continued to skyrocket on up. It's currently in a downtrend. We got kind of a bull flag almost type pattern here. We're going to wait till it takes out new highs. But if you do trade currencies, the Aussie US dollar may be one to keep on your watch list the week ahead as well. It's one of the few ones showing good strength in an otherwise relatively quiet summer. For all my Swing Scans members, it's been a real thrill. I will see Swing Scans folks in about 5 minutes. If you're not yet a member, go to swingscans.com, and that'll forward you to the page in Trade Mastery where you can register for that. And if you want to learn how to day trade the stock market the right way, you can join my Trading Open live room experience for next week as well. So welcome traders to our Trading Week Ahead broadcast. I'm Ken Calhoun from TradeMastery.com. I hope that you folks also made the correct decision to stay clear of new breakouts last week. That's kind of the false breakout gap and trap play that reversed. The market is uncertain and tired right here, so we want to be very cautious in our upcoming week ahead. So, see a question from Bob. Any suggestions for gold in advance of expected Fed Reserve interest rate hike? I'm staying clear of gold and oil right now because both our crude charts and our gold charts are relatively flat. If you look, I've traded GDX for years. It's going nowhere, right? And Nugget, here's NUGT, here's Newmont, NEM, here's ABX. Unless or until they take out new highs, I'm going to stand clear. In fact, the inverse gold instrument Dust has been in a 3-day rise. So the street is slightly bearish gold, but not significantly. It's still in a noise region right now. So I'm staying away from oil and gold as I have the last several weeks because they've been choppy and not really moving anywhere. I prefer charts that go, a little something like this, that have good sustainable breakout strength, that look good in spite of market recent drop yesterday. But a good question. Now, don't trade as though you're trading a fidget spinner. This is kind of like the latest rage all the kids are using, this little things that you fidget and spin. Don't be a trader like that where you're trading fidgety charts, right? Only trade strong breakout charts that have good sustainable runs, booyah, that are likely to actually run for you. So great question. Let's see what we've got coming up next here in our markets. There's a lot of things. The first thing you always anticipate is a shake or a reversal or a false breakout right above or at the previous day's high. So I always wait at least 10, 20 cents depending on the chart above the prior day's high. I'm also looking for increasing volume like this chart, right? You've got increasing count. For things that are inside the range, I look for breakouts just simply above previous resistance levels. So for example, if you're looking, this is Kohl's KSS. Nice momentum runner going from 35 to 37 yesterday. It had a 2-point run, which is great. These kind of 2-point runs are great for day trading the open range breakout during the first half hour or hour. You still always anticipate a reversal within the first 20 cents or so, and always look to sell right under whole numbers and don't buy right under whole numbers. You see how 38 was exact with Swiss clock-like precision, the resistance in KSS yesterday for a 2-day chart. Just like the tradable part of the day was right above 36, right? It's right above. It has to get right above a whole number breakout resistance. And that'll do it for another episode here at Trade Mastery. I hope that it helps you in your trades. Remember to subscribe to this channel, leave a comment or question in the area below, and until next time, Trade with passion, trade with little small stops, and try to make as much money in your trades as you can. So best wishes for success in your active trading. Be sure to visit me at trademastery.com. Good luck.